What up, peoples? Bidayer is my name, and I'm here to talk about all things related to the future of payments, cryptocurrency. This is Techciety. You've probably heard a little bit about some cryptocurrencies like Bitcoin and Ethereum, but you may not know a whole lot about it. Even though it's been around for a decade, it's only recently started getting noticed by the general public. If you're an early adopter, congratulations! You've been part of a movement that will shape how we use money to buy and sell goods and services. And if you come here because you've been hearing about crypto in the news or from someone you know, then welcome. There is a lot of confusing information out there about the space, and trying to understand it all can definitely be overwhelming. So let's try to understand it together. But first, in order to understand Bitcoin, we have to look at the history of money and how we got to where we are today. There have been many different ways of trading between people since the beginning of human existence. What determines the value of something is agreed upon by multiple parties, and if someone has something that the other wants, then trading can begin. Conversations between people in the early days of humanity could have gone like this. If you gather this food for me, I'll give you this sharp rock I made. Okay, here's a deal. This is what's known as bartering. Trading goods and services still happens nowadays, but in more modern ways. We've evolved from using things like barley and precious metals to paper and digital monies because of its efficiency and ease. Can you imagine, in this day and age, buying a house with wheelbarrows of grains? How about a cup of coffee with pieces of gold or silver? Now, there needed to be a certain standard that is accepted by everyone to make it fair, right? Well, we can't trade with something that will deteriorate easily like food. Our assets would disappear all at once from outside interferences like rotting, wild animals, weather. So in essence, it needs to have sustainability. We also need something that is easy to transfer from one person to another. So when the idea of getting off these more primitive ideas of money came to be, the Chinese thought of using a paper money to be able to trade goods and services. And because it was standardized across the country by the government, it became known as fiat currency. All sorts of money nowadays are considered fiat currency. The dollar, the yen, the kroner, the British pound, and the peso are all examples of fiat money. This is because they are all declared to be a legal tender by each country's government, but it doesn't have any intrinsic value. It isn't backed by anything. There's just a belief of what people agree it's worth to be. Even gold and silver has arguments on whether they hold intrinsic value. And so, paper currency was very reliable in China, because everyone agreed to its worth. It was durable, and one could carry it around quite easily. It became so popular that a few centuries later, it was introduced and adopted to the Western world. But it introduced a new problem that people hadn't thought of before. It could be printed easily, and forged, and devalued because of it. How does that work? Well, let's take the Mona Lisa for example. Would you agree that it's a priceless piece of art? Now let's suppose that one day, there were suddenly 1 million copies of the Mona Lisa spread throughout the world. Many would then regard it as something very ordinary, and its value would significantly go down. The same thing happens with paper money when we print more and more of it. When the government decides to print money, what can also be referred to as quantitative easing, the prices of goods go up, and that's when we have inflation. Inversely, when people decide to hoard money and not spend it, or there becomes a shortage of money, then the prices of goods go down, and that's when we have deflation. The unreliability of paper money's value can go up or down depending on what the government and its people decide to do to it. And that's why, for a time, The Chinese went off paper money and went back to using silver coins. So people then began to question using fiat money because they realized that if the government can do whatever they want with their currencies, then it's not really fair to regular normal day people who just try to live their lives. Imagine going to a store and buying a loaf of bread for $5 one day, and then the next it costs $10 for that same loaf of bread. That kind of hyperinflation has happened before in many parts of the world like Germany, America, and Brazil, to name a few. In order to pay for war, Zimbabwe printed money in the mid-2000s, and prices of goods were doubling every day. The most recent and possibly famous case of hyperinflation has been in Venezuela, where their currency, the bolivar, became so worthless that people began using eggs as a form of currency. Imagine trading eggs for goods in a store, or even going on the black market for a carton of eggs, and it being worth the equivalent of $150. Sounds pretty crazy, right? But I'm telling you, that's what happened. And back in 2008, there was a global economic crash which affected the world in ways closer to the Great Depression of the 1920s. The housing market, the banks, and a lot of retail and institutional money was at risk in America. People were losing money and jobs. The American people lost a lot of faith in the financial institutions they once believed in. So the government did what they thought felt appropriate. They saved the banks from financial ruin by printing money and giving it to the banks, instead of giving that money to the people. This resulted in bank CEOs giving themselves raises and everyday people being hurt in the process. The question you might be asking is, why would the government do this? Or how could we let this happen? Because of institutional and governmental figures doing whatever they want with money at the expense of everyday people, the invention of Bitcoin was born. The entity or entities known as Satoshi Nakamoto knew that if they didn't do something, the people's voices would be lost, and it would be difficult to see the light of day. So in order to make a hedge against the banks, Satoshi launched Bitcoin.org on August 18, 2008, and created the digital currency known today as Bitcoin. But for this Bitcoin to work, it would need to have addressed the problems of previous currencies on top of having the benefits. For starters, there could only be a limited supply of it with no way of making more. So it was decided that the maximum supply of Bitcoin that could ever be in existence is 21 million. And of that, roughly 3 to 4 million have been said to have been lost, and about 2.5 million are still up for grabs. Another step to be taken would be acquiring and distributing Bitcoin. How could the people get some for themselves? Well, similar to gold mining, people could mine Bitcoin for themselves and earn it, or trade from others that held some. In order to mine Bitcoin, a miner could allow their computer to solve computational problems, or blocks, and for their work, they would be rewarded with some Bitcoin. It was also decided that miners couldn't be paid the same amount over a certain amount of time, because as the supply runs out, the value of it would be worth more, so they introduced halving rewards. This is when rewards are literally cut into half. In the beginning, you could have gotten 50 Bitcoin for mining a block, and after a certain amount of blocks were mined, you would only get 25. And for people to store their Bitcoin, there would need to be a wallet. So then digital crypto wallets were created for storage. And just like regular wallets, there are different types with their own pros and cons. Now another problem they had to tackle was security, and then Satoshi created the ledger. This ledger can be thought of like a really old and long book, which previous recordings couldn't be altered or edited, but new recordings could be added to the end of it. And the Bitcoin network was established in this way, where if you want to alter it for your own gain, simply put, you would basically have to rewrite the entire ledger from its inception, including the hundreds of thousands of transactions that are currently going through on a daily basis, as well as all the computers on the network to simultaneously agree to what the ledger says. Sounds pretty tough to do, right? Well, it would basically take lifetimes to accomplish something like that. Now, when it came to looking at what banks utilize, they knew that banks are aware of how much you have in your bank account, right? Well, in a similar fashion, Satoshi thought that there should be some accountability involved, so there aren't any shady stuff happening when using Bitcoin. Otherwise, the project would be destroyed and we would be back to square one. So they decided to have all accounts be made public, so anyone could see how much Bitcoin an account has at any time, as well as a history of any transactions made. These paper trails would always be put into place for heightened security. However, unless publicized, no one could tell who owns what accounts. You could have the security of knowing that even though the public knows the amount of Bitcoins in a wallet, they couldn't attach the name to the account. But if your name and account were publicized, then people could confirm if you traded any Bitcoin with good or bad intentions. So with all these general steps put into place, Bitcoin was put out into the world as a first digital currency in existence. It had a lot of rough patches in its initial phase, but as with everything, there are ebbs and flows. Just like stocks, money, and gold, the price of Bitcoin has come up, come down, had its pumps and crashes. The price of Bitcoin in early 2009 was 3 cents. In early 2011, it was $1. In 2014, it shot up to $1,000 before going down to $200 a year later. You might have heard Bitcoin's all-time high was about $20,000 a few years ago, and since then has gone down to a low point of the $3,000 range, and bounced quite a lot in between. Could you imagine that your 2 cents a decade ago could turn into thousands of dollars today? It can be difficult to imagine. You're probably wondering what the price of Bitcoin will be in the future. As with any investment, everyone has different projections of price, but only time will tell. But because of the scarcity of Bitcoin, there aren't enough Bitcoin for every millionaire in the world to own just one. Isn't that insane to think about? And not only that, since the launch of Bitcoin, thousands of other crypto projects have emerged, all with different use cases and purposes. Some are good, some are bad, but only time will test to see which one emerge. But Bidia, how can I own a Bitcoin? It's so expensive. Well, you're in luck. You don't have to worry about buying whole Bitcoins at a time. The way it's set up is so that you can buy in fractional amounts. And if you want to own more than just one wallet, then you can do that too. Now, I am not a financial advisor. I'm just a cartoon bull that, just like you, has gotten interested in the crypto space. I mean, I'm literally a two-dimensional character. So I'm not here to tell you what you should do with your money or how to spend it. I just like talking and learning about the space. And I hope you do too. So if you like the content, please let me know because I enjoyed making this and it feels good to know that you enjoyed watching. So until next time, stay bullish.
Just